Last week we heard that US inflation, as measured by headline CPI, is continuing to come down. It's still above the Fed's target, but it's moving in the right direction. Want to know more? Keep watching. Hello, yes, this is David and this is Trading Today. Inflation seems to be falling. In other words, the rate at which prices are going up is decreasing. Prices are still rising, and that, according to headline CPI, at an annualized rate of 4.9%. But that was down from the 5% from the previous month and down from the 5% that was expected. That's all good news. PPI also was encouraging. However, we have the Federal Reserve that at the beginning of this month raised rates to 5.25%. That's the upper range. And as far as markets are concerned, it's expected to hold there to now pause through June and July. However, the market expects a rate cut in September, and indeed it expects the Fed funds rate by after the December meeting to be 4.50%. So that's a suggested cut of 75 basis points this year, in the rest of this year. That's not what the Federal Reserve are saying. And in fact, this is a very, very busy week for Fed speakers. Lots of FOMC people talking today. And in fact, as I'm recording this, Raphael Bostic has been saying a number of things, and I'll just sort of read those out for you. First of all, he said the economy is working in our favor in pushing inflation down. But he also said, while it's right to wait and see, that is, the effects of all the rate hikes we've had so far, it may be that the Fed does have to raise rates further. And he capped that off by saying that there is a risk of recession, but he expects it to be very mild and shallow. So you take that how you like. Later on today, we'll also hear from Austin Goolsbee, Lisa Cook and Neil Kashkari, all FOMC members as well. But as far as the markets are concerned, since the beginning of April, the S&P has been stuck in a range of 40.50 to 41.90, hasn't been able to break out in either direction. So we're going to have to wait and see how things develop there. But bear in mind, we have two major things to consider. There's still the banking crisis concerns. Is that going to continue to weigh on markets? And even more importantly, at the moment, we have got problems with US Congress or US lawmakers and the debt ceiling, which, as far as Treasury Secretary Janet Yellen is concerned, could be breached as early as the beginning of June. Lots to look out for. Thank you very much. I hope you found this helpful and of interest. If you did, please like and follow. And as always, best of luck with your trading. Goodbye.